Hi, this is Akmir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 20th of April. Starting off with Brandshield, so you can see that we may finally be ending the months or even years of the decline that we've seen in the stock. I've got a bullish divergence line there in place since February. That normally is a sort of a leading indicator in terms of a turnaround. Got that falling wedge there just on the resistance line of that falling wedge at 10 3/4, so an end of day close or weekly close above that. And we could be on our way towards 14 pence, which is was basically support on the way down, and the lower area of the gap down that we had back in January. Obviously, any sub 10 pence price action would probably mean that we have to go back to the drawing board in terms of recovery, as would be the RSI back below the 30 level and that February uptrend line. Moving along to a perhaps slightly happier situation, Cornerstone, which seems to be mixing fundamentals and technicals at the moment. We had that falling wedge break, that trend line break around 17 pence at the beginning of last month. A bit of a rally after that, but came back to the resistance line break area, which can happen. Now we've had a gap to the upside off the lows, and holding that gap at 17 3/4 could mean that we head towards around the bottom of the gap area again, that late January gap down around the 28 pence level, maybe as soon as the end of next month. Obviously, we don't want to make any new lows here. In the interim, if you're a fan of the shares and looking for a more substantial recovery, it could be that we're in the bouncing off the bottom of that broadening triangle from August last year, and that would imply a 2 to 3 month target, or maybe 3 month target as high as 45 pence. But let's get to the mid-20s maybe first before getting too excited. On to Capital Metals, which updated the market again today. Here we've had we had the positive here of that trend line break around 7 1/4 pence, which was highlighted previously. Again, like Cornerstone, a bit of a sideways shuffle after that, but got a bull flag breakout here, gapped higher into that tiny flag, and then gapped up again out of it. So that looks pretty encouraging. Does suggest that we get up to 11 pence maybe over the next 2 to 4 weeks, or perhaps even sooner. So a nice turnaround there for Capital Metals on the cards. On to Eckoh or Eckoh maybe. Here we've got, we had a bear trap gap reversal, so gapping off the lows there, and never filled the top of that gap there at 38 pence, which is positive. We've also got a rising 50-day moving average, which is a second positive, and we've also recovered the old February support around 41 pence. So all in all, above the 50-day line at 42. Looking for a target here, maybe as high as 70 pence over the next couple of months. And that would take the shares back to where they were maybe back in the summer of last year. So looking much more encouraging there. To finish off the positive picture, we've got a bullish divergence line there. So we had the lower lows for March, April, but a higher RSI support. And that should provide and continue to provide reasonable momentum for the shares. Onto a stock where I chickened out at looking at it in terms of calling it higher. Here we had major resistance around 85 pence neckline resistance. That was broken yesterday on the close, and we followed through quite nicely there for Essenys. Looks as though we could head up to 109, 110 at the top of that rising March trend channel, even if the shares then fall away after that. But we want to hold 85 pence, basically, old resistance becoming new support ahead of £1.10 for Essenys. Itaconix, I keep looking at this one all the time for some reason. It seems to crop up all the time. Here we've had trendline break there from back in June last year. We've got a rising 50-day moving average. We've shuffled along or above the 50-day line over the previous week, or last week at least, ahead of that trendline break. Gapped up today, which is encouraging. And the view is that we're in a rising trend channel based at 4 1/4 pence. Above that, we could head up to 10 pence, maybe by the end of next month or going into June. If you're cautious, maybe wait for the 200-day moving average at 6 pence to be broken. But with that rising 50-day line, it looks like enough has been done on a technical basis. Smart money still in live company, which is nice to see, and sort of willing the shares to consolidate above 10 pence, which it looks as though they are able to do. We've got a rising trend channel from back in December. Top of that channel currently heading for 14 pence. We could see that by the end of next month, especially if we can close above 10 pence today, which seems to be on the cards after yesterday's very strong price action, that strong candle that we've had. We've got the 50 and 200-day lines rising. We've got a long RSI uptrend line there from November, multi-tested as well, tested just at the start of the week or the end of last week, so looking good there for live to head up to 14, especially while we hold above 8 pence, which should be relatively easy. On to a stock which maybe I should have chickened out on, but I didn't. McColls. Here we've got a situation where the shares did manage to hit the top of that rising trend channel at around 5.25 pence, something like that. We've come back a bit after that, but as long as we remain above the old resistance there from April at 4 pence, we should head higher. And in fact, we could even upgrade the upside now without getting too cocky, as high as 8 pence by the end of next month, while we hold above 4, but only while we hold above 4 pence. And obviously, with the issues the company's had or has had, anything could happen there in terms of the price action on a fundamental basis, at least. On to sovereign metals, which has been one of the stars of the year to date. Here we've got classic pattern with the previously we were noting the gaps to the unfilled gaps to the upside, so we've had several of those. The main one was the 1 through 35, which obviously took us to the best levels at 53 pence earlier this month. Gap down after that, but it bounced off the floor of this rising trend channel and gapped higher today. That suggests that we're in a rising trend channel heading for 70 pence, maybe by, over the next couple of months, so mid-June, something like that, as a time frame. And only really well below 38 pence, recent support delaying that scenario. The other point to note, which is a nice little kicker, is the way that we're just about to have the 50 and 200-day moving averages close in a golden cross. And the run-up to that tends to be the strongest part of the cycle, and that might explain why we've had the gap higher today. So above 38, looking for 70 on sovereign metals. On to Sareum, which has had a bit of a journey over the recent past. Shied away from looking at it earlier in the week, but we had that gap to the upside through the 200-day line, which was filled, and then a pullback down to 208, which probably would have flushed out most of the weak hands. Current position is that while we're above the floor of that gap, 258, looking for at least a retest of 337 or 330 or towards the 340 area as the initial target over the next week or two. Big picture target as high as £5 at the top of that wide rising trend channel from this time last year. But the main thing here is establishing and maintaining support above 250. Which was the old February support, but old February resistance rather, and that looks like that is being done, and therefore we can say we have a tighter stop loss there at the 200-day line. Just a couple of stocks to go now. First one is Simic, which has had a lot of coverage here before. Very happy to see it just land near that 3.75 pence October resistance line projection target that we had. So I think the high today, 3.67, so close at least to that target. View now is that above the 200-day line, we should keep making progress here and possibly head as high as the top of that gap down from September at 4.65 over the next couple of weeks. And that would probably suggest that we're in a rising trend channel, or we've got a resistance line there heading in the way that it would head towards the 4.75 area or that gap area, top of that gap area over the near term. And that means we're in a rising trend channel along the lines of what I've just drawn now. So that's been in place since October. Finishing off with Xtract, which looks as though it's just about to try and break out, have a major breakout here. Basically needs to close above 7 pence on a weekly close basis. And that would mean that we're ready to explore the top of a rising trend channel from January last year, heading towards 11. So a weekly close above 7 could take Xtract up to 11 pence, maybe by the end of June, something along the lines of that particular time frame, we've got the 50 and 200-day moving averages both rising in parallel, which tends to be a decent continuation signal. So if it's not this attempt, one would expect a successful break of 7p over the next couple of weeks or so. That's it from me today. More updates tomorrow.